Hey guys, what's up? Welcome back. Awesome to have you guys back on the channel. Now in today's video guys, we are following up. This is a part 2 of our previous market structure video. So we went into market structure discussing smart money concepts. So guys, this is a follow-up. This is us actually looking at the charts, and in today's video guys, we're going to get into just a little bit more than market structure on its own. We're going to be going into things like how do we confirm our swing lows and our swing highs, and like we said guys, we're going to be looking at trends. But for trends, and because we are using smart money concepts, what we are going to replace the word trends with is order flow. So we're going to be looking at how order flow changes across the different time frames. Now let's get into Aussie CAD guys, and for you guys that know how much I love Aussie CAD, you guys are going to see today why I love Aussie CAD so much and how Aussie CAD just gives that beautiful information on where the orders are flowing on these different time frames. Now a nice super tip for you guys, we are on the 4 hour, but as you guys can see that if we squinch our screen, if we zoom out to the max, and now that we can't see the candlesticks, the individual candlesticks, this is just as good as us looking at daily structure. And if we zoom into the point where we can actually start to see the candlesticks clearly, so maybe to like this point over here where we can see each individual candlestick, once we can see each individual candlestick, then the structure that we are looking at is 4-hour structure. So we'll be able to, once again bringing in the concept of time frame thinking, we'll be able to see one time frame above and one time below the actual time frame that we're looking on. So guys, we're on Aussie CAD on the 4 hour. What we can see, we have this red line to kind of highlight our major swing lows, so our higher time frame support. Like I told you guys that if our screen is zoomed out to the point where we can't see individual candlesticks, we can consider this to be daily swing lows, and then once we can see the candlesticks, that's our 4-hour swing highs and swing lows. So we can see that prices broke to the downside this daily support structure here. Only and only once prices violate a level of structure, like in this case a low, do we consider this to be a valid swing high. So we'll see this concept as we are going through. We're going to play the market. We're going to talk about, I guess, the structure that's develops on here, and we'll just go through how we identify the different order flows on these different time frames. So guys, what we can see from a 4-hourly perspective is a market that has been trending to the downside. So we can see this nice lower lows and lower highs. So just to identify some structure, we see these lower lows and lower highs. Now our previous lower highs were these lower highs in this area over here. So we'll just speak about our minor time frame structure, but our major structure we're going to highlight using obviously this red and green horizontal ray. So let's play the market onwards, or let's just leave it playing, and we'll speak about the structure as this market is playing along. So what we can see is obviously this resistance area now being broken. So what can we conclude from a 4-hourly perspective? So from a 4-hourly perspective guys, what we can conclude is that order flow has now changed. Why? Because we spoke about in the previous video that in a downtrend we expect to see consistent lower lows and lower highs, and once a previous level of structure is broken to the upside, we can then consider that all of the sellers that were holding this trend to the downside have somehow been exhausted, or at least there have now been more buyers in the market to come in and send prices higher than a previous area where sellers came into the market from. So guys, now that we can see this nice swing low here and we can see this new swing high here, we have our major 4-hour structure. So let me just try and play this market on a lot faster because it is kind of taking its own time to play on. So now that we have, let's just mark this out. So now that we have, I guess, we have these lower structures here, we have a swing high, and then we have a low. What we are looking at is we're looking at the highs and the lows. So I told you guys that as now that we can see the candlesticks a little bit clear, we're looking at the 4-hour time frame. So we can assume that from a 4-hourly perspective, we have broken above resistance. So order flow on a 4-hour has now turned bullish. Why? Because we have signs of a bullish trend. We have prices impulsing up, correcting, and violating some structure. So we know that 4-hour structure has a bullish order flow, but our daily structure has a bearish order flow. And order flow on our daily time frame is and will remain bearish as long as prices are below the previous swing high that has been formed before prices violated our swing lows. So this is the resistance that is keeping and holding this trend to the downside, and as long as price is below this uptrend, this resistance over here, from a daily perspective, order flow is still bearish and this bearish structure is still intact. So now that we've discussed that, guys, let's just play the market on a little bit more so the structure can develop, and then we can discuss how prices actually develop from this point onwards. Let's delete that. So now we can see prices approaching that resistance area. What we can also see is prices breaking above this resistance area here. So we do see prices kind of pipping above this resistance area over here. So what can we conclude in this case? So now we can see that from a daily perspective, we have a new swing high. So now that we've broken above this swing high over here, where is our next confirmed swing low? So our higher time frame confirmed swing low has now shifted and become this swing low here. Why? Because we have daily structure that has created lows, resistance, lows, and the only reason why we confirmed this as a swing low is because we see prices giving us new higher structure. So now that we've spoken about that, let's not cancel what we've done there. Let's just delete that. Let's just play the market on, let a little bit more develop on Aussie CAD, just so that we can see what's happening here. So guys, let's talk about 4-hour order flow. So we can see that from a 4-hourly perspective, we have support, we have resistance, we have support, we have new resistance, new support. We see a violation of resistance, confirming that swing low. We then see new support. We then see a violation of this resistance, confirming this swing low as our last swing low. So in this uptrend that is happening here on the 4-hour, we know these are the lower structures that are holding this bullish order flow, or in other words, that are holding this bullish market, this uptrend. Now, if and when these lower structures do get violated, only then can we assume that 4-hour order flow has become bearish. So let's just play the market on. We see prices staying above that area. So order flow from a 4-hour, there we go. We have violated these support structures over here. Why can't we confirm this as a swing? Or let's just speak about the structure. So we have our support, resistance, we have a higher high. So these are our new swing highs. We don't confirm this as a swing high until prices violate our lower structures. Only after prices violate support do we then consider this to be a swing high. So now we know that 4-hour order flow has been broken to the downside and can potentially remain bearish. If and only when prices violate resistance, does order flow then resume its direction. So let's play this market onwards, and we can see that prices violate our resistance areas. Now, how do we accommodate our structure for this new high? Let's look at our extreme levels on our 4-hour chart. So what we can see is a price that created lows, created highs, created lows. Where are the next higher structures to have been formed after these lows? It's these extreme highs up here. Where are the next swing lows before we have here? And obviously we only confirm this as a new swing low after we have our resistance being violated. So now we know 4-hour order flow, as much as prices broke below this support, order flow is still bullish from a 4-hourly perspective. Why? Because we are still violating our resistance areas. So guys, we still have this as, I guess, our confirmed swing high. We can only, we have broken above. So we have created some higher structure over there. we've confirmed the swing low, we've broken above. Let's just do this, delete this. So now that order flow is bullish, guys, we will obviously be taking into account our major support structures and then finding out when order flow does turn bearish. So we've broken our structures over here, we've broken our resistance areas, so this is our next confirmed swing low. So we know that that's the structure that is holding our 4-hour structure as bullish. So if we play the market onwards, we just see how prices develop over there. Let's wait for some more structure to develop. What we can also see, if we do obviously extend, or rather just expand, so that we can see our individual candlesticks. Once we're at the point where we can see our individual candlesticks, then we can also identify order flow on this 4-hour chart. I told you guys, if we're zoomed out to the point where we can't see the candlesticks, then we're looking at daily structure. But once we can see the candlesticks, then we're looking at 4-hour structure. So we can see some, or rather we can see some resistance over here, resistance being violated, giving us a swing high, giving us a swing low, giving us a new swing high, and we'll only confirm this as a swing high after we find a pullback and after there's a nice retracement. Once we violate this resistance area, only then do we confirm a swing low. Now, just as a rule of thumb, as we're going on and we're discussing how structure develops, what happens, guys, if prices pull to the downside and we see this move to the upside? Do we confirm this as a swing high before prices have violated that level of resistance? No. Why? Because prices can easily come down and break this support. This is not a confirmed swing low unless we see resistance being violated. Otherwise, this can easily just turn into a new low in a new bearish trend that is going to come and attack our next structural lows. So just for us to keep referencing just basically how order flow develops and basically what we'll be looking for order flow to change on these different time frames, let's just get back to our 4-hour and continue to play the market on and see how order flow develops here. We see that we're in a nice bullish run. Prices just keep creating new resistance, new higher highs. We're still moving to the upside, no significant pullback. So we know that from a 4-hourly perspective on that small time frame, price action is extremely bullish and we're pushing to the upside. Now, one thing I can note, because I can see here, if we do extend to the point where we can see our individual candlesticks, what we can notice is now a change in order flow. So we have resistance, support, resistance, support, resistance, and support. What we then see is a lower high and then obviously a new lower low. So if we use the terminology that we used in our first video explaining what we're talking about, what we're seeing here, as prices are breaking resistance areas, we're seeing signs of strength. So market is showing us momentum in the bullish direction. We are seeing signs of strength because resistance areas are being violated. Once we see support structures being violated, market is showing us signs of weakness. So we can expect bearish order flow once we see market beginning to violate support structures. So let's just play the market on just a little bit more, just so that we can update and see how far we've been. So if we look at just our major structure, guys, here from a I guess just higher time frame perspective, what we can see is that now we've violated our resistance area. So obviously confirming whatever resistance and whatever support, we have new resistance. So on a bigger time frame, obviously order flow is bullish because we're violating resistance areas. And on that daily, what we can see is, yes, we were in this bearish trend, but we created that lower high, higher low, and then we started violating resistance areas. Once we violated resistance, what did we then do? Order flow changed. Now we're attacking those resistance areas from a higher time frame perspective. Why? Order flow is bullish. If we reflect back on our reasons why order flow changes, let's talk about our market participants, guys. So we know that in an uptrend, market consists of mostly buyers. Now, why do we say that order flow is bullish or order flow is bearish? So we understand that market is fractal and that there's trends going up here, trends going down here, trends going up here, trends going down here. So what's happening is that when order flow is primarily bullish, we will see buyers coming into the market, retracements for whatever reason, but buyers coming back in and being able to push prices above areas where sellers saw value. So as long as we see buyers being able to push prices above areas where sellers pushed prices down from, so that's rather in our areas where we see these retracements starting, as long as we see buyers being able to send prices higher, that just means that there are more buyers involved in this market than there are sellers. Yes, there are sellers, but sellers are not able to push prices lower than where buyers see value. Buyers see value there, buyers see value there, buyers see value there. And as long as this bullish order flow holds, we will see support areas being respected and obviously resistance areas being broken. Why? Because there are more buyers involved in this market than there are sellers. So we'll continue to just play our market forward. Let's even jump onto the daily time frame just so that we don't waste a lot of time speaking about our 4-hour structure as well. And we just pay attention to our major structure and just see when order flow changes from that higher time frame perspective, just so that we can run the idea home. So what we can see here is a short term, I guess, some sort of a pullback. So we do see prices creating lows, creating highs, creating lower lows. So we understand that order flow has turned bearish, but we do know that our most recent lower structures where we saw buyers coming in being able to violate resistance is this area over here. So from a higher time frame perspective, market still has a bullish order flow as long as prices are above this area here. So let's just play the market on in daily perspective, see if cool. Now that we have a new higher structure, what can we do? We can confirm this as a swing low, and now we know that our daily structure looks something like this. So now we know that after we've broken above, these now become our swing lows. We know that buyers still have a bullish order flow. Buyers are able to come in and send prices above a previous resistance area where we saw sellers pushing prices down from. Now if we play the market forward, do we get a break? Do we get a continuation to the upside? So now what we see is finally sellers being able to send prices below a previous area, an area that should be protected if buyers are still in this market, below a previous area where buyers came in and were even able to violate resistance areas. So now we know sellers are in the market. We've been able to violate some bearish, or rather some support structures, meaning that our order flow from a higher time frame perspective has changed, or has potentially changed, because we're seeing that sign of weakness. Once we see our support structures being broken, markets are showing us that sign of weakness. Now we can see that we have some, I guess, this push to the downside. So we're waiting for that swing low and obviously that swing high. We're seeing a beautiful follow through of price action after we violate these previous support structures over there. Do we get a pullback? So we can obviously also see, if we were on a 4-hour, how our bearish order flow is holding nicely. We're seeing those lower structures being respected. We're seeing lower lows consistently being formed in the market and those lower highs. And then what we see, and I can see this from a daily as well, we see our resistances be for the first time being violated. So now we know on that H4, on that smaller time frame, guys, order flow has potentially changed. We've broken resistance, so we could resume maybe an uptrend or whatever the case is. But we know that from a higher time frame perspective, we're expecting a bearish move. Why? Because higher time frame order flow has turned bearish. Yes, our 4-hour order flow can turn bullish, but higher daily and higher other time frame order flow has potentially changed on the bearish side of things. So let's see. Okay, cool. We have a new higher structure over there. So we know that 4-hour perspective, this is our nice bullish order flow. Higher time frame perspective, we're still expecting some bearish order flow. Now, nice. So from a 4-hour perspective, what we can see is, let's just move this to the top. We have some lower structures over there, and prices have violated those lower structures, now showing us that whatever bullish order flow was happening from a 4-hourly perspective has been broken to the downside. Now what do we see? Now we see order flow, bearish higher time frame order flow aligning with 4-hour bearish order flow. What are we expecting in this case? We're expecting a violation of our support structures, because now we're seeing both higher time frame order flow, which is our daily, and our middle time frame order flow, which is our 4-hour, both flowing in the same direction. Sellers are taking control from a higher daily time frame perspective. Sellers are now in control from a 4-hourly perspective. So we'll keep playing the market onwards. Ooh, what a nice bearish run, guys. So now we've violated these lower structures over here. We know that daily order flow is bearish. We've created that low, we've created resistance, and the only time we confirm this as a swing high is after we violate our lower structures. Now we know that daily order flow has turned bearish. Now we can obviously, I won't slap on that green trend line again, but now because order flow is bearish, we're obviously looking at those resistance areas, waiting for those higher time frame swing highs to be violated, and only when those higher time frame swing highs are violated do we then assume that order flow from a higher time frame has turned bullish. So what do we have here on the daily? We have some market moving sideways. Do we have some structure? Okay, cool. So now we can assume that we've created a nice low over here. So prices came down, gave us a low. Then we have resistance, and the only time we confirm this as a swing high is only once prices break below our lower structures. So now we know that these are our resistance areas that are holding daily order flow to the downside. What we also have, guys, is if there was any higher, whatever other higher time frame order flow that was being held by the support structure, we also see that support structure now being violated. So we clearly see that order flow was bullish, both from a higher time, or rather let's just say order flow was bullish from a higher time frame perspective, and in this bullish higher time frame perspective order flow, we've had both 4-hour bullish order flow and bearish order flow, because the market needs to breathe. Market only goes through two phases: expansion phases and contraction phases. In other words, impulsive phases and corrective phases. And that's just generally how the market moves, and that's how we see price delivering our order flow. So whether order flow is being delivered on a smaller time frame, we will see that impulse nature of the market, and as well as when order flow is being delivered on a higher time frame, we see the exact same structure. Now guys, I'm sure we've exhausted all that we can exhaust in this session, this market breakdown in a way, and this young backtest in a way as well. Guys, I hope that we've actually enjoyed the session. I hope that we've gained so much, because we've spoken about our market structure, we've spoken about that order flow, we've also spoken about how to confirm these swing highs and these swing lows, and how to identify basically when different time frames, when the order flow on these different time frames is changing. So you're always aligning yourself, I guess, in the direction of the trend. You can also add your confluences, guys. Align yourselves, or rather let order flow align for you. Let your daily, your higher, or rather you don't have to use the daily, but let your higher time frame order flow align bearish. Let your middle time frame order flow align bearish. Let your entry time frame order flow align bearish. In that case, you have more probabilities on your side for that trade to actually follow through in the direction of the assumed order flow. Guys, we have exhausted. If you have received the value that was intended for you in this YouTube video, guys, definitely do drop this video a like. Otherwise, if you've reached the end, guys, and you're not subscribed, I know you're only here because you've received the value. So definitely do subscribe, because we always come out with content like this every single week. This is T.Mayne, guys, your FX Chasers mentor. I will see you guys in the future videos. Thanks so much for watching until the end. Have a great week, guys. Cheers.